Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor for WeissGroup.com. Welcome back to the show, Sean.
Hey, thanks for having me on.
Sean, gold, you said, is trying to hold on to $1,200 an ounce. What are the prospects?
I'd say they're really mixed right now. What we're seeing the U.S. dollar rise, and this is basically due to a growing sensation in the global markets that we're going to have a global slowdown in growth. Now, that doesn't necessarily mean a global recession, but expectations of growth are really backing off at this point. And so money around the world is looking to rush to places where they can experience growth. And one of those places is the U.S., so that's pushing the U.S. dollar higher. That tends to weigh on gold when that happens.
What should people be looking for as any sign of what the trend could be?
Well, if 1200 does not hold, then we'll probably take a trip down to 1189. And so I'd look for support there. What I did for my Super Cycle Investor subscribers was last week we exited a bunch of positions, took more gains than losses, but I'm not saying that the losses don't hurt. And we'll just wait for another entry. I mean, we still own a few gold positions, and I see this correction as short term. What I do expect is that what will happen is the higher U.S. interest rates go, the more pressure there is on the Fed to stop doing this, because it really affects global debt. And global debt is enormous, especially the global debt that's actually fixed and priced to U.S. interest rates. As those rates go higher, then it really affects the ability of all these companies around the world to make their debt payments. So I think that the pressure is going to grow on the U.S. Fed not to derail global economic growth, and so we will see what happens there. But in the meantime, we can expect the dollar to go higher. That's why we exited a whole bunch of gold positions. And we'll also have to watch the other things that are, flashing warning signs for the global economy and stocks. That's why we had a huge sell-off on Monday. In fact, I told my subscribers to Supercycle Investor about 5 things that are weighing on the market, one of which is the U.S. dollar, because that will hurt the sales of many S&P 500 companies, even though those companies just reported record earnings. In fact, that makes it harder for them to beat those record earnings going forward. Then we have China's economy flashing warning signs that growth is slowing down. And speaking of China, number 3 would be the U.S. trade dispute with China. I mean, the White House made noises yesterday, that's on Monday, about possible auto tariffs. But President Trump is saying that he's going to meet with the Chinese president later in November at the sidelines at the G20 summit and sort things out. But then Vice President Pence comes out today and says that China had better play ball or else there'll be a new Cold War. That's not the kind of thing you say when you're trying to get people to work things out on the table. So that has to worry the market. Then we saw oil prices enter a bear market. In fact, oil's cratering today. And over the weekend, Saudi Arabia said that it would probably cut oil production, but President Trump tweeted his displeasure with that, and that seemed to send oil prices getting lower. Saudi Arabia also talked about their exports, how they're being underbid by other exporters around the world. That includes the U.S. and Russia, which that could lead to a price cut. That's one of the things weighing on oil prices right now. And finally, the fifth and last thing is that tech stocks got hammered after two Apple suppliers cut their outlook. That's an Apple lower that has a lot of people worried about the tech sector. So those are the five basic things. Now, we can add in more. There's budget disputes in Europe and other things wrong in Europe. There's selling in the cannabis stocks. There's international banking worries. There's a whole bunch of things. But it seems like the global markets have a lot of worries on their plates right now, and they aren't really looking at the bright spots. And so that's tending to push things lower. So I had my subscribers trim down their portfolios really small, and we're adding hedge positions, inverse funds and also some puts, just because I think things will probably go lower.
We'll have more with Sean Brodrick right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Sean Brodrick. Sean, two people or two different positions on what's happening with the market. Everybody feels there's going to be a correction, but right now we're seeing a gradual step down. Should we expect one day, oh my God, it's a Black Friday and everything is just dissolved, or is this going to be an orderly step down and give people lots of opportunity to get out of the way of a growing snowball coming down the mountain?
Well, I find those things impossible to predict. For one thing, the algorithms pretty much rule the market now, and so you're actually asking me to predict what a machine is going to do. I don't know. What I can do is position my subscribers to cushion them against downside, and also have some bearish positions they can cash in when things look bottomy, and so then have some money to pick up the bargains. And make no mistakes, there are plenty of bargains. Gold stocks in particular have been beaten down senseless. I still think we entered a new gold bull market. It's just this is one of the pullbacks that when you look at a longer term chart and look at it a couple of years from now, it won't look like much, but going through it right now is quite painful. So that's the kind of things that we have to live with.
Are we seeing junior gold miners cut back production or cut production altogether because they don't feel it's going to be profitable right now?
Well, it depends on the company. There are some that are quite good that are actually expanding, but I mean, I can tell you this, it's very, very hard for a silver miner in particular to make any money at all when the price of silver is at current levels. It's just crazy. And so what they end up doing is digging out their high grade and selling that at the worst possible prices. So, could this lead to more consolidation in the sector? Certainly. But will there be opportunities? Absolutely. I spoke at the New Orleans Investment Conference, just 2 weekends ago, and, I had a chance to chat with some great junior companies that when the bottom comes, these are the ones you will want to own. They have so much going for them, and the people that run those companies are not slowing down. They can see the turn coming and they want to be prepared for it. And I talked to juniors in gold and silver and zinc and uranium. So there's plenty of opportunity out there. But we probably could see lower prices before we see the next big rally.
We'll have more with Sean Brodrick right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what kind of action is going on in the marijuana space? We keep hearing in Canada, where pot is now legal, that the stores cannot keep up with the demand. Does a shortage create more demand for marijuana stocks?
Well, so far, no. I mean, we just had AFRIA report great earnings. And there is a supply-demand mismatch in Canada right now. But we're just not seeing stocks pick up a lot with that. In fact, we're seeing downward pressure on some great names. So again, I think things could get cheaper before they get more expensive. And so we'll just have to see how that plays out. But I'm not really a buyer right now, but I could be a buyer soon. You know, I mean, we are very close to support in a whole bunch of issues. And so maybe that support is where the next leg higher comes, or else it could be before that. So we'll have to see how it works out. The underlying story for marijuana gets better and better. I mean, if you saw the action in the U.S. at the ballot box at Tuesday's election, a lot of pro-marijuana measures passed all over the country. And so we are taking steps closer and closer to actually seeing real legalization in the U.S. Now, Jeff Sessions is out as the Attorney General. He hated marijuana. His successor does not seem to like it either, so I don't think people should hope for anything there. But nonetheless, marijuana is one of those rare bipartisan issues where people on both sides of the aisle can actually see the advantages of actually legalizing it. And so I think things will proceed. And you can position yourself in some select names ahead of that. But in the short term, we're probably looking at a further correction down to that support I was talking about in some leading names. When those leading names get to support, that's when we can potentially see a bounce. And so that's what I'll look for.
Are we seeing any action in cryptocurrencies? Because I remember a year ago, it was my birthday, and friends were saying, did you get your Bitcoin? It's at 21 grand. And the next day it crashed. So is that ever going to pick up again?
Did that really happen to you?
Yes, it did.
It crashed. Oh, man. That is tough. Look, here's the thing is that we've seen the bigger cryptos just drift sideways for quite some time. Bitcoin, it's been in a range since something like June. That's a heck of a long, well, of course we can talk to gold investors about drifting sideways for a while. They know that story too. Ethereum has been flat. Downright flat since like September. So maybe things will actually pick up. I keep hearing, people in this industry, and I work with some of them, saying the next turn is coming and they will lay out a solid case for it. And I wish them the best. I am a hard assets guy. That's just the way I feel. But everybody has their own blind spots. Everybody has their own things that appeal to them. There is some tremendous potential in cryptocurrencies, in ways that really let you monetize things that were not properly monetized before. And so we'll have to see how that works out. Certainly, I wish the people involved in that the best. And if the smart people I work with are right, the next turn is coming. It's just I'm not the right person to talk to about that.
When you said you're a hard assets person, it's nice to know that even if the value of something falls, there's still something there to sell if you have to. What do you sell if it's a cryptocurrency?
Well, I don't know, but like I said, I am not a cryptocurrency expert. You know, I work at a place that's filled with cryptocurrency experts. I can put one of them on the phone if you want, but I'm not the right person to ask about it.
For the average person, is that a pretty dangerous place to step into? Because really, it's an unknown product. It only has existed for a few years.
Well, everything's unknown until you invest in it and trade in it, right? I mean, when the first time you traded stocks, did you make money? I certainly didn't. I can tell you that much. You know, you have to trade. It's a learning experience. You see how things go. I see lots of things that are appealing now, but due to all the reasons I mentioned, and let me throw one more thing in, which is that the U.S. is now doing quantitative tightening, and that's kind of sucking some support out from under the market. I don't know if that leads to the big fall that you were talking about, or if it's just going to be a gradual drip, 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 where people can look at things over time and actually decide what they want to do. I don't know about that. But there are some bearish forces at work in this market that are kind of pressing down on stocks. Now, I just made the bearish case. Let me make the other case. Trump can change this with a tweet, right? He can have a meeting with the Chinese. It goes incredibly well. And so they say, you know what? This whole silly trade tiff, what was all that about anyway? Let's be friends again. Let's do this. Let's do that. So that kind of thing can change the whole ballgame. That's what makes investing in this kind of market, you know, kind of precarious. You're not really sure what's going to happen because it's pushed around by all these geopolitical issues. On the one hand, trade talks can work out. On the other hand, we might be going into the next Cold War if you listen to Vice President Pence. So I'm not really sure about that. So just people should be careful. Invest in things that you are comfortable in. Though, frankly, I'm trying to push the envelope with my own subscribers just to push them into things they hadn't really thought about. There are still bull markets out there, by the way. One is broadcasting, which is doing quite well. REITs, they look good right now. They have looked good. Many people might think it's late in the cycle, but on the other hand, you know, this could go on for a while longer. There's some other things as well that are looking good, but they tend to be mainly defensive names. And that tells you a little about this market as well.
Okay, and what would some of those defensive names be?
Well, I mean, utilities, REITs, things that pay good dividends. Those are the things that are actually doing well.
And things that people will need even if there is a recession or a downturn in the market.
Yeah, but you know what? I mean, Home Depot had great earnings, right? I mean,
yes, they did.
At least I like that earnings report. Well, actually, I'm looking at the chart right now, and it actually plunged this morning. Now it's clawing its way back. I guess people sold on the news just because they're so nervous about everything. And then they said, hey, wait a minute, that was a great earnings report. Let's buy that again. So, yeah, one thing that could weigh on Home Depot is that we are seeing more weakness in the home market. And so, you know, that's generally a driver for Home Depot because after people buy a house, they say, you know what, that stove looks ugly. I need to buy a new stove, blah, blah, blah.
Yes, I believe I'm partially responsible for that Home Depot profit because I just moved into a new place.
Yeah, so you have to buy all the new stuff. You have to repaint.
And so I know all the sales clerk by their last names now.
Right. So that can be problematic for a stock like Home Depot. But yes, defensive names, Johnson & Johnson, you know, that's another one that, you know, people always look to. And I think that's near a 52-week high, as a matter of fact. Why is that near a 52-week high? Because people are looking to defensive names, and that's one that is not only defensive, it's a dividend aristocrat, and so people are looking for those kinds of things. So even though interest rates are going higher, which you might think would weigh on those stocks that actually pay dividends, that is not the case. When people are scared, not scared so much as fearful about the future, maybe pulling in their optimism that they used to have, then they'll look toward the more defensive names like Johnson & Johnson and stuff like that. And so that's why those names tend to go higher.
Sean, thank you so much for chatting with us.
Thanks. It's always a pleasure.
My guest has been Sean Brodrick, Senior Editor for WeissGroup.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.